Stock futures, they are trading higher this morning, at least across the equities markets, major averages here as investors digest the latest read on the U.S. economy. GDP for the final quarter of 2023. Yahoo Finance's Josh Schafer has got the numbers here for us. Hey, Josh.
Hey, Brad. So yeah, when you take a look at this GDP release that we got this morning, you'll see the U.S. economy grew at an annualized rate of 3.3% in the fourth quarter. Economists had expected 2%. So a pretty big beat here. Of course, if you've been following economic data releases in 2023, not necessarily a surprise to some of us, it's been beating consistently. But really what you see here when you take a look at this chart is how strong the economy was throughout 2023. The annualized rate, the early reading here for the annualized growth rate for the economy in 2023 comes in at 2.5%. That's a mark up from 1.9% that we saw in 2022. But the key thing here and the biggest takeaway from this release is we also get PCE inflation data within this release, guys. And I think several economists already out highlighting, if you take a look at what that shows us, we're looking at about a 2% target, it being at the Fed's 2% target for the fourth quarter. Mark Zandi over at Moody's out highlighting on X today. He said, we're right at the Fed's target. Strong growth and low inflation feels very good. And so when we think about this combo here, this is kind of your soft landing combo. Inflation coming down, growth still good. That means the economy might be able to survive this if we keep this trend going. Because remember, a lot of economists pointing out now, the Fed is going to cut or should be cutting per their view, because inflation is coming down, right? And we're seeing that in this release. Inflation coming down, economy still growing. Positive outlook, guys. Positive outlook on a Thursday. I like that.
We will see. All right, I know. But you know what's interesting to me? I'm a little bit surprised that we're not seeing more of a reaction in the futures market here this morning. You would think when you get a number that is that strong, the implications and then what that could mean here for the Fed, you would think we would see a little bit of pressure across the board. But like you were pointing to, and like we've been talking about all week, talk about the fact that they're also weighing some of these results that we're getting out here from earnings. And at least right now, it seems like enough here in order to counter some of those fears.
Yeah, I mean, overall, Shauna, I think when you take a look at specifically PCE over the last 6 months, this is a conversation you're going to hear a lot. We get the PCE for December coming out tomorrow morning, right? Yeah. A lot of economists highlighting that 6-month annualized PCE that's basically flat. Yeah. Like we're talking about inflation when we look at the last 6 months, it's been very, very good. Mm-hmm. And at some point, people just think the Fed is going to have to come down from that restricted level, because if they don't, then that's when you're going to start seeing issues. So I think it's honestly maybe more of an inflation story than a hot economic data story as far as what we're getting from market reaction.
Yeah, exactly. And the fact that this is so backward looking. All right, Josh, thanks so much.